The Intelligent Investor by the Grandmaster of Value Investing, Benjamin Graham. Introduction. Ladies and gentlemen, investors, and those just trying to figure out what to do with that mysterious thing called money, welcome. Today, we're diving into The Intelligent Investor by the Grandmaster of Value Investing, Benjamin Graham. Think of this book as the ultimate guide to making your money work for you without losing sleep over every hiccup in the stock market. First published in 1949, yes, way back when people actually dressed up to go to the bank, it's been updated a few times, most notably by Jason Zweig in 2003. This isn't just any finance book, it's the holy grail for anyone serious about investing wisely. So, what's the big deal? Graham's philosophy is all about value investing, which is a fancy term for buying stocks like you'd buy socks, on sale and in good quality. His teachings are like the life hacks of the investment world, helping you avoid dumb mistakes and keeping your portfolio healthy and happy. Highlight and summary. Alright, let's dive into the juicy bits. Graham's first big idea is value investing. Now, don't let that term intimidate you. Essentially, it means finding stocks that are priced lower than their actual worth. It's like finding a designer shirt at a thrift store for a fraction of the cost. Graham advises that you always look for a margin of safety, buy at a price low enough that even if things go south, you're not completely wiped out. It's kind of like making sure you don't spend all your money on avocado toast, you've got to have some savings for a rainy day. Next up, we have the iconic Mr. Market. Imagine the stock market as a guy with wild mood swings. One day he's super optimistic, offering you stocks at sky-high prices, and the next day he's in a funk, practically giving them away. Graham tells us to be smart and not get caught up in Mr. Market's emotions. When he's overly excited, maybe hold off on buying. When he's down in the dumps, that's your cue to grab those undervalued stocks. Now, Graham talks about two types of investors, defensive and enterprising. The defensive investor is like your grandma who keeps her money in a cookie jar and only invests in safe, predictable stocks. She wants steady returns and hates taking risks. On the other hand, the enterprising investor is like your tech-savvy friend who's always on the lookout for the next big thing. They're willing to take more risks for potentially higher returns. Graham respects both types, but warns against trying to be an enterprising investor without doing your homework. Basically, don't dive into the deep end if you can't swim. Graham lays down some principles of intelligent investing that are as solid as Grandma's secret cookie recipe. Do your research, know what you're buying. Patience is key, think long-term. Avoid speculation, don't bet the farm on the latest stock market tip you heard at the bar. Diversify your investments, don't put all your eggs in one basket, or in our case, all your money in one stock. The book also delves into security analysis, which is a fancy way of saying, look under the hood before you buy the car. Graham teaches us how to evaluate stocks and bonds by looking at financial statements, earnings, dividends, and growth prospects. It's like doing a background check before hiring someone. You need to know the company's fundamentals before investing your hard-earned money. To keep things interesting, Graham includes a history lesson on the stock market. He analyzes past market trends, bubbles, and crashes to show that what goes up must come down, and vice versa. Understanding these patterns helps you stay calm when the market gets a bit crazy, kind of like knowing that every roller coaster eventually comes to a stop. And let's not forget Jason Zweig's modern updates and commentary. Zweig connects Graham's timeless wisdom to today's market conditions, showing that while the times may change, the smart investing principles stay the same. He uses contemporary examples and case studies to make the concepts more relatable. It's like updating Grandma's cookie recipe with a dash of modern flavor. Conclusion. So, what's the verdict? The Intelligent Investor is like the investment Bible you didn't know you needed. Graham's principles are timeless, and his advice is solid gold. He teaches you to be rational, patient, and disciplined in your investment approach. Remember, it's not about getting rich quick, it's about building wealth steadily over time. Let's recap the key points. Value investing is your go-to strategy, buy quality stocks at bargain prices. Keep your cool when Mr. Market has his mood swings. Know what type of investor you are and stick to it. Follow Graham's principles, do your research, be patient, avoid speculation, and diversify. And always check the fundamentals before investing. This book is a must-read for everyone, whether you're just starting out or have been investing for years. It lays a strong foundation for understanding the stock market and making informed investment decisions. Graham's wisdom is like a lighthouse guiding you through the stormy seas of the market. So, if you want to be a smart, savvy investor, get yourself a copy of The Intelligent Investor and start reading. Remember, happy investing is all about making informed decisions and not getting swayed by the market's ups and downs. So, let's all raise a toast to smart investing and a future of financial stability and growth. Happy investing!